Professor Altomonte, your new paper is on the topic of ABS and monetary policy. Now, the financial crisis has highlighted the risks of mortgage-backed securities. However, the ECB is pushing for a revival of a better functioning asset-backed securities market in Europe and announced in June that it would buy simple and transparent notes. The European Monetary Authority argues that it could help boost lending to the private sector. But what are the risks of bundled bank loans?
Well, ABS product actually bundle assets together in order to essentially diversify the risk and increase the liquidity of the underlying operations. The issue is that in this operation you can bundle assets that can have different risks. For example, US mortgages that then defaulted and created problems, as we know, through the so-called collateralized debt obligations. However, there are different types of ABS products. For example, instruments that puts together loans to small and medium-sized enterprises or residential mortgages or loans for the car industry or credit cards, etc. Now, historically in Europe, these products have been actually characterized by very low default risk, as we show in the paper. And therefore, these instruments, if properly created, if properly assembled, can actually boost lending to the private sector through this idea of diversifying risk, increasing liquidity, and allow for higher funding for the originators.
And how can the ABS market in Europe become more transparent? What measures should be put in place?
Well, what we show in the paper is that there is a high level of fragmentation of the ABS market in Europe. Of course, there has been a very large shrinkage of the market after the crisis. But on top of this, there is also fragmentation in the sense that there are different collateral rules across different countries, let alone for the fact that there are different default laws in the different countries. There are issues on how these products are rated across the different legislations, in terms also on the loans that sits on the balance sheet of banks, how they are evaluated. And of course, there's also different structures. I mean, the ABS products are made in different ways in different markets and through what we call different special purpose vehicles. That is the instrument that stays behind the origination of these products. And therefore, if we want to really create a European, simple and transparent, as the ECB is asking for, ABS market, there are a number of legislative steps and regulatory steps that might be undertaken and which we discuss in the paper that can actually, in a few years, probably lead to a potentially very large market for ABS products in the euro area.
In your paper, you analyse whether ABS will become the anti-blockade system of credit markets in the euro area. What are your conclusions?
Well, we play along with this idea that ABS, can mean asset-backed securities or also anti-lock breaking system. And the story is that actually there is the possibility for a fully blown ABS market in Europe, and we estimate a potential size of around 3 trillion euros if all the regulatory steps I was discussing before are put into place. Given this sheer volume of potential instruments, there is the possibility for the ABS market to really restart credit activities in the euro area. However, there are a number of trade-offs that we put forward in the paper in terms of, let's say, timing versus size of the operation. The sooner you want to act, the smaller the market you're going to tackle, because the current ABS market is relatively small in terms of targetable products. While if instead you put in place all these regulatory changes, probably the market that you're going to tackle is going to be much larger, but of course it takes time. However, in the paper we also discuss how possibly this trade-off could be solved in a number of ways, either via the effects on the targeted long-term refinancing operation, that is the new operations set up by the European Central Bank, or via the targeting of a specific class of ABS product that are residential mortgage-backed securities.